WRSR, Owasso, Flint. The following program has been pre-recorded and is paid for by Discover Flint Township. The views expressed are those of Discover Flint Township and do not necessarily reflect the views of 103.9 The Fox or Krill Communications, Inc. Welcome to Discover Flint Township, a program showcasing our local community. Flint Township is ready for your next move. And now, your host, Flint Township Economic Enhancement Director, Tracey Tucker.
I'm Tracey Tucker, and this is Discover Flint Township, brought to you by the Flint Township Economic Development Authorities, HAP, Financial Plus Credit Union, Shea Automotive Group, and 103.9 The Fox. This morning, we will be speaking with Heidi Zuniga from Financial Plus Credit Union, and we are going to be talking about home equity loans. So we're going to get started right away. Hey, Heidi, how are you today?
I'm good. Morning, Tracey. How are you?
I'm good. I'm so glad that you could come into the studios. Life is starting to get back to normal.
I know. Yay.
I love it. I love it. So you are going to talk about something that affects a lot of people, and that is home equity loans and how people can really look for cash in their own home, right?
Oh, absolutely.
All right. Cool.
And it really couldn't be a better time right now. I mean, with the values being up right now, a lot of people don't think about it, but utilizing the equity in your home are some great advantages to that. We offer at Financial Plus, we offer home equity loans, and we also offer home equity lines of credit. Right. A great product for people who are looking to do home improvements. Maybe you're looking to pull some cash out for helping your kids with their college education or your college education, vacations, maybe down payment, or just cash out to purchase a second home, vacation home.
Oh, second home. A lot of people are just still looking for that first one, yes, so they can have the home equity.
Yes.
So that's great, and I know that most banks offer equity loans, equity line of credit. But we are specifically talking with Financial Plus Credit Union today, and if you use a different bank, you can check with them as well. But today we're going to dive in a little deeper with Heidi. So if you have your home and you have the equity, can you use the home as collateral for the loan? How does that work?
Yes. So when you are looking at doing a home equity loan or a line of credit, we do utilize your home as collateral for the loan. Okay. So there is a lien that is placed on your home. It's a second lien. It could be a first lien if you don't have a mortgage. Okay. Sometimes people will look at doing a home equity loan because the costs are much lower than doing a first mortgage. So it could be a first lien. It could be a second lien. Yeah. But it is a lien against the property. We do go up to 90%, which a lot of other lenders won't go that high.
Oh, wow.
So, of course, it's on a case-by-case scenario, but we do go up to 90% combined loan to value of what the home appraises for, versus, the loan amount that you're looking to take out.
Sure. That makes sense. So, and you have to have a recorded mortgage if you have a mortgage, right?
Yes. So it does get recorded. It is a lien on the property. Okay. Once it's paid off, then, just like a regular mortgage, we would do a discharge of lien against the loan.
Okay. So, and then you also talked about a line of credit. So what is the difference between a loan, an equity loan, and an equity line of credit?
So with a home equity loan, it is a fixed rate, and usually there is a set term. It could be 10 years, it could be 15 years, but just depending on how long you want to take the loan out for, the payment is going to be the same every month. The interest rate is going to be fixed based on your loan to value, credit score. Those are different things that we take into consideration when we're offering the loan, but the interest rate is fixed, and it is a closed-end loan, so your payment's the same every month. You're paying principal and interest on the loan until the loan's paid in full.
Okay.
On a home equity line of credit, that is a little bit different. So on a home equity line of credit, it is a variable rate. it is tied to the prime rate. So as prime starts to adjust, whether it goes up or down, your interest rate can also rise.
Okay.
The flexibility of a home equity line of credit is what most people are after. If you're looking to do home improvements, but you're not sure, you haven't mapped out all the costs, or if you're looking to remodel your kitchen, bathroom, but you're not sure exactly how much it's going to run, some people will do a home equity line of credit where they can just draw off it as needed. The nice thing about a home equity line of credit is the payment is amortized over 15 years. At Financial Plus, we have a 5-year draw period. So you can draw off the line of credit, you can pay it down and reuse it up to 5 years. So after the 5 years expires, then whatever the balance is at that time, it would just go into repayment for the remaining 10 years. If there's not a balance on it, then the line just closes down. Obviously, we can look at rewriting it for you if you'd like to keep it open. But it is really nice because you can reuse it as much as you want.
That's kind of cool.
Yeah, it is. And like I said, if you're not sure, exactly what you're wanting to do, if you don't have a set amount that you know that you need, it is nice. Other people use it for emergencies, or like if their kids are going to college and they need it for tuition, they can just draw off what they need and pay it off and then reuse it. Right. So it does make it very
Or
convenient.
if they're remodeling, and especially if you have an older home, you could run into other issues that come up, and that
always
that you might think it might be a $10,000 job, and so you add in maybe another $5,000 on the line of credit just in case you run into something, and next thing you know, you did need that money.
Absolutely. And people have used it just, it's just always nice to have that backup for emergency purposes.
Sure. So now you also talk about how you come to the conclusion of how much equity they have and what the value of their home is. Now, how do you determine that? Is it through appraisal, AVM, and why don't you describe to our listeners what that is?
Yeah, absolutely. So recently we have switched over to using AVMs, which is an automated valuation of the value of your property. So we do not require an appraisal. We can use the automated valuation, which will give us an estimated value on what your property is worth. Now, for whatever reason, if you think your home may be valued higher than that and you're not getting the amount of the loan or the line that you want, we always offer the option of doing a full appraisal. And that is when an appraiser would actually come out, and he would come, it'd be an interior exterior valuation. And you know what, if you've done a lot of improvements to your house on the inside, sometimes the automated valuation, they're not going to know that unless, the appraiser actually comes out. People have done that. So where sometimes, you're like, oh, it'd just be easier not to have it. Depending on how much you're needing to take out, it may be worth it to do the appraisal.
Sure. That makes sense. And so, that determines, once you have the valuation of the home, that determines how much equity they have in the home, right?
Absolutely. So again, depending on how much you're wanting to borrow versus the value, and that, like I said, that affects, as far as it can affect your interest rate. Obviously, the higher loan to values we go, or the longer term, the interest rate can be a little bit higher on a fixed rate loan. A line of credit also, just depending on what we're going up to as far as our loan to value, it can affect the interest rate.
Right. And I don't know, we're talking about home equity loans, but people might not understand what equity means.
Yes. That
means the difference between what's left in their mortgage, right, and what the value is. So it's that gap in between. So if your home is worth $100,000 and you have $45,000 left in your mortgage that needs to be paid off, then your equity is 55, right? 55,000. Okay. I just wanted to describe that for people because not everybody may understand what that means. So
Absolutely. And
I just hope I described it right.
Yeah. And so, for instance, yes, if you're looking at, if your value is $100,000, and like I said, the max that we can go up to would be the 90% of that. So 90,000 minus whatever mortgage. If you have a mortgage, we'd have to subtract that out, and that's what you would have available to utilize.
Okay. All right. So now, are there any closing costs or anything with this? I know, like when you do a regular mortgage, there is.
Yes. So in this case, there are costs that, we still have to, we have to pay for the automated valuation or the appraisal. We still have to pay for the title work. But the great thing about getting your home equity loan or line through Financial Plus is there is no cost to our borrowers. They are all lender paid fees. So where you'll still see there'll be fees noted, but they'll be paid by us. They'll be paid by Financial Plus.
Okay.
So how great is that?
That includes the appraisal and the title work and all that.
Yes.
Oh, okay.
So, if you
so
decide,
that's something for people to look at when
absolutely.
they're looking at loans. Don't just look at the interest rates. You need to look at what kind of costs are associated with getting the loan, and who's offering what. And in this case, you're offering zero for those fees. That's
absolutely
good.
Because even if we do an appraisal, we will collect the appraisal fee up front from our members, but we refund that to them at the day of closing when the loan funds, we will refund that. So ultimately, there will be no cost to our members.
Okay. Wow. All right. And then I know you have great rates, and our listeners can check with their bank for rates as well. But since we have Heidi here, we're going to let her talk a little bit about the rates at Financial Plus.
Yeah. So like I said, we have awesome rates. We have our fixed home equities can be as low as 3.99 APR. Again, like I said, your interest rate will depend on the term of loan, how long you want to take it out for, and also our loan to value, how much you're borrowing versus the value of the home. Our HELOCs start as low as 3% APR. And so again, there are no costs to our members. Again, on the home equity line of credit, those rates are based on the prime rate. So again, it is a variable rate. However, it's just going to fluctuate with prime. So as the rates start to go up, that rate could also go up. However, if you're not utilizing it, you're only paying interest on the funds that you are actually drawing off the line of credit.
So you could get a line of credit today, lock in. No, those are variable, right?
Right.
So it's only fixed if you do the equity loan.
Yes. If you do the loan, a home equity line of credit is exactly what it is. It's a line of credit, so that does have the variable rate. But again, you're only paying interest on the funds that you're borrowing. So basically, it's almost kind of like if you look at it like a credit card, you would get a monthly statement based on what your balance is for that month. If you have a zero balance or you pay it off before the end of the billing cycle, there's no interest being charged to you.
So if you're worried about the interest rates going up, which a lot of people are, you would be best to get in and get the fixed rate, which is the equity loan.
Yes.
And if you're not too concerned about it because you don't know how much you're actually in need and you pay your stuff off rather quickly, so you're not going to have an extended period of interest, you could look at the HELOC or home equity line of credit, right?
Correct.
All right, awesome.
And what I've kind of told my members is, like, for instance, if you are doing like a remodel or renovation, you might be better off looking at the line of credit. And once you're completed, we could always even look at rolling, rewriting it into a fixed rate loan if you're really concerned about, rates.
Yeah, great. So a lot of great information. And if they want to get more information, you can check with your own bank, or you can look into Financial Plus Credit Union with Heidi Zuniga. And where can they get a hold of you, Heidi?
So, if they're looking for information, general information, they can go to FPCU.com. That's our website. Or feel free to contact me directly. You can call me at 810-244-7356. Again, that number is 810-244-7356. Or you can email me at hzuniga@myfinancialpluscreditunion.com.
Yeah, and the rates for the interest can vary. And the NMLS number for Financial Plus is 586579, and MLS number for Heidi is 518085. I've been told we need to say that when we're talking about interest rates, so make sure we get that in. So I want to thank Heidi for coming in with us, and we'll see you next time.
All right. Bye-bye.
Bye. I'd like to remind our listeners to, if you have any questions or you missed out on those numbers and you need them, email me at discoverflinttownship@gmail.com. You can visit us on Facebook at Flint Township Events. Our YouTube channel, Discover Flint Township. Our Anchor channel is Discover Flint Township for the podcast. You can visit our webpage, discoverflinttownship.com. Catch the pattern here?
Yeah.
Or you can visit the township's website at flinttownship.org. Again, I want to thank our guests.
Everywhere.
Yeah, and thanks to our partners, HAP, Shea Automotive Group, Financial Plus Credit Union, Guaranteed Rate, and 103.9 The Fox. Discover Flint Township with us next Sunday at 7:30 a.m. right here on 103.9 The Fox. I'm Tracey Tucker, the Flint Township Economic Enhancement Director, and I would like to remind everyone, stay safe, stay healthy, shop local, buy local, and discover Flint Township.
This has been Discover Flint Township with Tracey Tucker. For more information, visit discoverflinttownship.com. Flint Township is ready for your next move. The preceding program was pre-recorded and was paid for by Discover Flint Township. The views expressed are those of Discover Flint Township and do not necessarily reflect the views of 103.9 The Fox or Krill Communications, Inc.